Welcome to episode 4 of Contrarian Korner. I'm Ben Kelleran. We have a special guest on today. His name's John Polomny. He's a very sharp investor and writes on Actionable Intelligence Alert and definitely a Substack you guys should be checking out. He also has some of the best weekly recaps going over commodities, what's going on in the world, and current events. So definitely someone that I've been looking forward to talking to for a while. John, thanks for coming on.
Happy to be here.
Yeah, so I was thinking we could start and get into your background a little bit. Maybe if you could just do a quick introduction to how you got here, what you do for work, and how you kind of ended up looking at the commodity space in general as an attractive area for investment.
So, yeah, I'm in my late 50s. I live in Texas. I still work. I build power plants, operate power plants, fix power plants. That's kind of what I've done for the last 30 years, all kinds. Nuclear, gas turbine, coal, now renewables. And so that's pays very well. So I still do that because you got to have health insurance. But anyways, on the side, I've been investing probably since I don't want to be cliche here, but since I was like a kid, and I got interested in it. And obviously it's been a journey. Obviously learning as you go along, making a lot of mistakes. And I would say over the last probably 20 years, 15 to 20 years, I really refined my way of doing things. And basically what happened to me was I was having a lot of spotty returns. And I'm like, what I normally do if I'm having a problem in a plant or some equipment or some kind of diagnostic problem, I go find a subject matter expert. When I was working for the utility, we had subject matter experts for just turbines or like generators. That's all they did. They could answer any question. So I said to myself, who are the best investors in the world? So obviously we can name them. And that's, with the ubiquity of the internet now, and because people just choose to do this, they put all their writings out there. So I started reading how these successful investors, how they were successful. And I started noticing a common theme, and the theme was, for the most part, first of all, there's a lot of psychology involved, right? Being able to buy things, understanding valuation, what is overvalued, what's undervalued, the psychology of being able to overcome like our instinctual need to survive by buying things when everybody else is selling. We hear all these cliches about Baron Rothschild's buy when there's blood in the streets, but it's actually psychologically difficult to do these things. More people buy at the top. The average retail investor buys at the top and sells at the bottom. It's notorious. So I started looking into this, and then I started, understanding there's like I've said this on every interview when I get asked this question. If you go to the front of the Berkshire Hathaway, any annual report, the first page is the year-to-year returns every year listed. It's like from whatever 1960s to present. It shows all the ups and downs that the Berkshire Hathaway's had, and if you look at the bottom, it gives you the average return per year. It's about, I haven't looked in a while, but it's like 18 or 19%. So we have some people, Charlie Munger and Warren Buffett, who are acknowledged as some of the best investors of all time, who were averaging through all the ups and downs 18 or 19%. And so yet we have a lot of people that think that they're investors. They want to be active in the market, and they get spoiled when they see things like Bitcoin or some of these crap stocks that go up. They don't understand the psychology or what's going on. And, God, I'll be with you if you, wrote NVIDIA up or whatever. But, there's a point where things are overvalued. And what I found the key to be is selling overvaluation, buying undervaluation. And so I'm not necessarily wedded to resource markets. It just happens to be that these things are historically undervalued versus the overvaluation we see in like the S&P. So that's where a lot of my focus has been. So that's kind of the story. I mean, I manage my own investments. I have the newsletter and everything. There's a long story about how all that happened. It's not worth getting into. But what I'm trying to do is, the one component that I try to tell a lot of, I know what my demographic is because I can see the on YouTube and Twitter, get a lot of young guys. And what I'm trying to get across to people is, a couple of key things. If you can learn the mistakes that other people have made, you won't waste your most precious commodity, which is time. You can't afford to lose a decade or 15 or 20 years screwing around with inconsistent returns. If you're going to be in this game and invest, you need to compound consistently over time. And that time is what gives you that advantage over the professionals, because you're not wedded to somebody looking over your shoulder that's going to fire you if you're down 1 year. So that's basically why I talk a lot on these interviews and stuff, and how I got into this. I wanted to try to like impart to people, I'm just an average guy. I'm not a portfolio manager. I'm not, but I've done fairly well in spite of myself. And I think if I would have had somebody mentoring me or telling me these things when I was 20 or 22 or 23, I wouldn't have screwed around for 15, 20 years learning the hard way. So that's kind of my story.
Yeah, I think it's a lot easier to look at markets with a 3 to 5 year time horizon than trying to guess what the next quarter is going to look like, or try and figure out what stock is going to go ballistic next, whether that's Nvidia or any of these AI stocks. But like you said, I think that's one of the biggest advantages individual investors have, is trying to look out longer term and figure out what the trend of the business actually is, what the valuation is, and take a look at kind of what you can buy it for versus what you think it's worth. So I think it'd be interesting to chat a little bit about some of the stuff we see going on with the ESG movement, with the solar, wind, all that stuff, with some of the incoming power demand from artificial intelligence. I think it'd be interesting to hear your thoughts on that whole picture, given your background as being involved in the power sector for a long time.
Well, I mean, you can already see, I think, that the memo went out. So I'm pretty, I don't want to use the word cynical, or I'm not really a conspiracy theorist. I do believe that people of wealth and power do try to advantage each other to have more wealth and power. If you're a wealthy mover and shaker like Larry Fink, you're going to hang around with other people and have access to the political class and things like that. And so it's apparent to me that, having been in this industry for, I don't know, almost 35 years, it was apparent to me that renewables, you're not going to run a major advanced economy on renewables. And the only reason is it's not because I'm a greedy capitalist that wants to pollute the world. It's because solar and wind are intermittent power sources. It's just that simple. There's a thing called base load. When you're in a plant, coal plant, natural gas plant, nuclear plant, these things just run and run. The goal is to keep them up as much as possible and keep them running. And you don't mess around. You come in, you might shift change and sit there for 12 hours on your shift and nothing happens. You just go through your little routine, water chemistry or making rounds, and you're getting paid a lot of money. And, very rarely, less than 1% of the time, does anything happen, like maybe a startup or shutdown, or if you have an upset. So you're just basically there to keep it between the lines. And so that's the base load power. And so I think what has happened is this mindset that came in. Look, again, governments in the end tend to want to have more power, whether it's an individual bureaucracy, bureaucrat, or governments as a whole. And so, one of the things I think, we went through these different environmental movements. That's, you got to understand, it's not like this big cabal of people. They have these different constituencies. There's people that actually believe environmentalism, and they're, people that, super glue their hand to the road in the middle of a highway. That's these kind of nitwits, while they're wearing an orange vest that's made from, plastic, which is, hydrocarbon derivative. But anyways, or feedstock. But all the way to people like Larry Fink, who's just, running BlackRock and trying to get as much money as he can. He'll go wherever he wants. This is a guy that was talking about renewables 2 years ago, and now he's on CNBC talking about we need to go full nuclear. Okay. And just happens that several days before that, the energy secretary was at Plant Vogtle for some ceremony talking about we need to build another 200 gigawatts of nuclear in the U.S. Now, this is a very, very big change in the mentality. And the reason why is because with this advent of this AI and these data centers and all this, the power consumption is so huge. People start, at all the consulting firms and all the investment firms, they start doing these linear, well, if it grows, but what's the combined annual growth rate of power consumption based on this many data centers? And you end up, we're not going to have enough power. And so, the memo goes out. This isn't, we're not going to be able to do this with, solar and wind. We need, nuclear, or in the fact, natural gas combined cycle will probably be another beneficiary. Because it's not like, Jennifer Granholm or whatever her name is. She doesn't know anything about anything. She's an attorney. Okay, that's a political hack that's been hanging around. She doesn't know how to make energy policy. She's just there. And so these people that have influence and have access, they're the ones that make policy. So I don't think that's being cynical. I think that's reality. So the memo went out, from Google, Amazon, and Facebook, and these kind of whatever they're calling themselves, they're going to need a lot of power. And so that's why you're seeing this complete 180-degree change in the attitude towards nuclear, for example. And so I think there will be greater demand. I don't like to get into these linear projections. A lot of people did that with EVs, and now that's collapsing. So you have to be careful by just doing linear projections out 10 or 15 years. But I do think that, these people, AI is the next big thing, power consumption, they know they need it, they don't have it. And so, we're going to move in that direction. I was always an advocate for, as a policy, to say, for the United States to do something similar well before this, which I called it 110, build 1,000 megawatt power plant, nuclear power plants in 10 years, and it would completely rejuvenate and change the U.S. economy, kind of do it like a space program, just amount of STEM jobs, high paid construction jobs, operations jobs, the spillover effects into industry to support that kind of growth. And then have a public-private partnership where, you whittle it down to two designs. You can pick design A or design B, and the NRC will fast track it because it's a proven design. Instead of, the problem with nuclear power plants in the U.S. is that everything's like a one-off design. You can go to some sites and there'll be two reactors there. They're totally different types of reactors or designs. And that's why it costs so much and takes so long. They've streamlined things like in China and India and Ross Atom. They don't have individual designs. This stuff is streamlined and it turns into like a production type situation. So that's where I think we're going. I do think longer term, nuclear is the salvation for power generation and humanity over time. It's just basically unlimited power. It's going to take a while for these canards to be put to bed. Stuff like mushroom clouds and nuclear waste. Waste is not a problem. Most plants store it right on site in casks. It's so small. But these are various canards that people that are against it bring up. But in the end, I had an interview with Malcolm Rawlinson about 5 years ago. We were talking about this when we were like one of the few people out there advocating for this on, at the time, Twitter. And eventually what happens is the price will dictate it. People's standard of living, I tell people, if you want to get rid of hydrocarbons, how many people do you want to die? And people don't, you start explaining what it takes, the energy inputs that go into a modern system like ours. And people they can't conceive of these numbers. They don't have a clue. And I've talked about this before. People can go on YouTube, especially younger people that are not familiar, like the old Tonight Show with Jay Leno. He used to go have a segment called Jaywalking, where he would go on the street and talk to the average American. And he'd ask them questions like, where's bread come from? And they'd say, the grocery store. Or like, where's electricity come from? The plug in the wall. So people, I don't fault them. I'm not making fun of them. They have no need to know this. Most people don't know. But I think they do know when the price goes up and they're affected. And then they, Bubis Americanus goes and says somebody needs to do something. So that's what will end up happening. I do think in the short and medium term, there's probably more of a opportunity in natural gas, just because if they need this power, you can build we did have a natural gas plant boom in the late 90s and early 2000s. They can turn those things out pretty quick. But in the end, I think that nuclear power has this multi-decade, and you see it around the world, right? It doesn't really matter what happens in the US or Western Europe. I mean, it's happening in the global South and East. So I don't know if I answered your question, but that's kind of my view on it.
Yeah, no, I think that was a good walkthrough of some of the stuff going on with nuclear. Might be interesting to take a look at natural gas, but one of the questions before we get to that I had, have you done any digging into thorium? It's not exactly an investable asset like uranium is with some of the stuff we've seen in the last couple of years, but I know a lot of people like the design and think that thorium is a better solution long term as far as nuclear goes.
Absolutely. Do you know why they picked uranium over thorium?
Yeah, because the thorium plants basically, I think it was the Department of Energy was basically like, well, if we do thorium, we can't get obviously nuclear material for missiles.
There you go.
And
That's basically it. Yeah.
yeah, but I remember, I think it was, they had a fully functioning thorium plant, I think it was in the 60s. And there was a story of a guy who's basically fighting for it, and he got basically shouted down and kicked out of his job, all these different things because he wasn't basically willing to go along with the uranium route. So it's an interesting backstory. But do you think we kind of see a move towards thorium in the next 10 to 20 years? Do you think we basically stick with uranium?
I think for the scope of investability, probably you'll probably become a multimillionaire in this uranium cycle. I think, yeah, down the line, you know, watch what China and India and those places do. They'll be the leaders on this, not the United States. So I think that people are working on stuff like that, and we just have to wait. I mean, you have so much sunk cost and so much invested already in this uranium. It's just going to continue. And then, but I do think it's a superior technology. It's just not investable, like you said earlier, right now.
Yeah. And so to get to the near term, I guess, next couple of years, 3 to 5 year window, like you said, I think natural gas is probably the solution for increased power demand. What do you think that looks like coming up as far as higher natural gas prices? I know we have a lot of LNG export capacity coming online in the next 3 to 4 years. I generally lean bullish on natural gas, but I know that's tough to kind of predict. I mean, they call it the widowmaker in commodities for a reason. So I'd be curious to hear your thoughts on natural gas.
So I've really probably never made money or really lost a lot of money on natural gas. It's kind of like you said, it's been a hard slog. Problem is that what has been is that, there is a substantially lower price in North America for gas than there is in the world, and it's mostly because of the transportability of natural gas, having to need LNG. So to your point, um, first of all, you're right. I think there's 6 to 9 billion cubic feet per day of new export. Maybe it's six. I can't remember. I get the numbers confused. But there's a pretty significant amount of new LNG export capacity coming online by the end of the year. The other thing that I'm more fascinated by, and I've been fascinated with this around petroleum geology, before the shale revolution, the first facilities that they built were actually LNG import facilities because we were going to have a shortage of natural gas in the U.S. And then shale unlocked a lot of the, Marcellus and Utica and Haynesville and Barnett. Everybody knows the story. And so, but the problem is these are extractive industries. So anyways, King Hubert here at Shell in the 50s, and he came up with a thesis about decline rates in fields. And he basically said that once a field reaches half its production of original resource in place, it goes into terminal decline. And so these are not cornucopias that last forever. And so that's another thing that's starting to happen. We've already seen it in the oil shales, like in the Bakken and the Eagleford, and we've seen it also in the Haynesville and some of these other smaller gas situations. So we may be in a situation where we're going to have increased demand because of the export capacity that's going to run into the ability for supply to grow. And so we may be seeing at least that's the opinion of somebody like Lee Goring and Adam Rosenzweig. So, but this is all something to keep in mind. The problem is that if price goes up, you don't know how much marginal capacity. Something that doesn't make sense at $5 an MCF might make sense at 8 or 10, and then you'll see that increased production. So, my view is that uh, I haven't been able to make a lot of money in natural gas trying to figure these things out. It's a little bit, it might be in the too hard pile, but I definitely have listened to the arguments of people that think it's going to go higher, and am sympathetic to it. But I think there's probably easier places to fish. Let's put it that way. But I wouldn't be opposed to, like, looking at a few companies, and then, if something, spikes or something happens. But do I think it'll be like I don't know. It's difficult to say. I really don't have too much of an opinion on it. Like I said, there's easier ponds to fish in, I think, for me personally.
Yeah, I agree. I've kind of mostly avoided natural gas. I've looked at a couple companies, but I kind of figure I'll just be a little bit along for the ride with some of my holdings that are exposed to thermal coal. But um, one of the things you're saying there about the shale decline rates, I thought was interesting. And one of the things I think will be very interesting in the next couple of years. I'd be curious to hear your thoughts on the Permian. I think I guess the way I'd put it is I don't know when that starts declining, but I don't think we're in like 2026 and talking about continued supply growth from the Permian. So I'd be curious to hear your thoughts on that and what's going on with the oil supply picture here in the U.S.
So basically, U.S. shale basically was like 80% of production growth for the entire world over the last 10 years, call it. And so, like we said, we already have seen two of the major fields go into decline. I remember driving through the Eagleford shale areas and back when it was booming, and it was unbelievable. Now you go through there and it's just like regular. And so again, part of the problem is demand for oil grows every year by about 1% a year. Plus, you have to take into consideration. So you've got 102 or 103 million barrels a day today. So demand growth will be another million barrels, probably a million and change. But then the thing that nobody talks about is the 6 to 7% decline, worldwide decline. So you basically need to find and bring on a new Saudi Arabia every year just to stay in place. And the problem is with the shales had 80% filling 80% of that void over the last 10 years or so. The rest of the world, non-OPEC supply atrophied. There's been no growth because the shales were so economically advantaged and so quick to be able to turn on. People weren't going to go out. I mean, you weren't going to go into, the last few years, go into the boardroom of like Total or BP and say, yeah, we have this big resource offshore Angola, but it's a $15 billion commitment in 10 years. I mean, they would have laughed you out of the boardroom. They just weren't going to do it. That's changing now because I think people see what's happening. And so I think, yeah, if you don't have that constant growth, there was some stupid remarks during first Trump administration. A lot of people were saying we were booming on shale. And I saw articles in the Wall Street Journal where we're going to be the new Saudi Arabia growth. We're going to grow production at 20 to 25 million barrels a day. It's going to stay there for decades. It's just totally stupid. There was no chance it was going to happen. So I don't know the exact timing of, it appears that the Permian may be plateauing. The fact that it does plateau, it doesn't even have to go in decline, just plateau. And that's a big problem for the entire world petroleum situation, because as I said, the rest of the world, non-OPEC, has not invested for 10 years. I mean, there has been some, but not to the levels that was needed to replace, as everybody was just relying on the Permian and U.S. shales. So I think that, you're going to have this constant upward pressure on oil prices over time. Yes, there's going to be, I mean, right now we're in a sell-off right now. Okay. I don't comment on short-term things. The dollar's up because the ECB cut rates, Bank of Canada cut rates. I mean, there's inter-market stuff that happens. And so, and we might be going into a recession. So there might be a little bit of a demand, who knows? I mean, but long-term, like you talked about, 3 to 5 years, which is what I look at, I think you're going to have an upward bias on the price just because supply is going to be challenged, but the demand is relentless from the emerging markets of the global East and South. I mean, you can just do a spreadsheet exercise if you want. You know, what's the per capita oil demand in South Korea or Japan, and just use them. Don't use the U.S. because U.S. is a car-centered culture, but use just Japan or South Korea as benchmarks for the rest of Asia, and then just plug in the spreadsheets. I mean, you very easily get to 120, 130, 150 million barrels a day of demand. I don't see that happening. So at some point, price is going to, you know, ration and deal with that, or stimulate more demand. And so I think that opens up opportunities, which we can talk about around oil services and other things, because there's just the world's not prepared to get production that to these levels to satisfy that kind of demands 4 billion people in that global South and East. So yeah.
I think one of the things too about shale that's interesting is the faster decline rates than the conventional fields, and it's one of the reasons that I'm very bullish on the offshore oil services sector. There's some stuff in there still that's trading at like 30 to 50% replacement cost, and I think the next 5 years and potentially longer could look basically like a bumper crop for a lot of stocks in that sector. So I think it's at least for me, like you said, it's an easier pond to fish in than something like natural gas. So I guess before we get on to precious metals, I'd be curious to hear your thoughts on coal. I know that people kind of look at it as the dirtiest resource out there, and we want to phase it out, get rid of it. And I think that's just very unlikely. If you look at something like 70% of the world's steel production relies on met coal. And then like you see basically every single year we're hitting record high levels for coal demand. So I'd be curious to hear your thoughts on that. I think it's a very interesting sector with cheap valuations to look at.
Well, it's perfect. You know, why do we use coal? Coal is easy to use. It's ubiquitous. It's easy to store. That's why people use coal, and it doesn't take that long to build a coal plant. So again, you have to have a holistic worldwide view on these things, not necessarily, you know, like we say in sports, you know, somebody that only talks about their team, we call them a homer. People have home country bias here in the U.S. and North America, Canada, Canadians. Everybody has home. Well, let's focus on what the API numbers are this week in the oil market. It doesn't matter, okay, week to week, okay? What matters is the long-term trends. And so it doesn't matter if we shut all of our coal plants down in the West, because they're building 1,000 of them around the rest of the world. There's sites that you can go to that track this, okay? And the reason why is as these countries become wealthier, the demand for energy inputs, you know, people have done this work where you can find these like on, there's different websites that track all these per capita things, but you can see these dot plots where you can see as per capita GDP goes up, the amount of kWs required goes up. And so you have to get these kilowatts, these energy inputs from something. And so if you don't want to, you know, that's why they use coal, and it's so easy to use and easy to transport. That's why it's being used. And so I think when you start, again, these are spreadsheet exercises. As these countries become wealthier and the people demand more things, everybody wants what we have, and they want to live a similar lifestyle. And so you start looking around. And the thing about coal, I mean, you already talked to Warder and some of these other guys, they know more about than I do, but it's very simple. I mean, you have thermal coal, met coal, thermal coal for energy production. I mean, it's not going to go away. The problem is that the West and a lot of financial entities that finance, I mean, I ask this all the time, could you permit, finance and build a new thermal coal mine in the United States? Probably not anywhere. So it's the same thing around the world. You have all these major mining companies lamenting, a lot of them have already divested or spun off their coal assets because they want to be ESG compliant, whatever that means. And so there's no financing. On the supply side, there's no really ability to really super increase the supply. So existing coal assets have a lot of value. They're cash flowing nicely. They kind of have that put under them because the price isn't going to, you don't have this opportunity to really ramp up supply. And so demand just keeps going up in the emerging markets, and will continue to for decades. We'll use coal for many, many decades around the world, and at least until nuclear, supplements this. So, or supplants it. So I think it has an opportunity. Obviously, steel making, rust is your friend, right? I mean, if anybody understands how raw steel is made, you have to use coking coal or met coal to make coke, and then blast furnaces and all this stuff. So I know there's a process. Somebody was on me in the comments one time in one of my videos, and they're like, yeah, but in Sweden, they have a process they're perfecting with hydrogen. Great. As soon as they commercialize it and can make, tens of millions of tons of steel a year competitively, I'm sure it will, we'll get rid of met coal. That's not happening though. I'm always open to new technologies and new processes, but things that work on a small scale don't scale sometimes. And that's why I think, it's the same situation with met coal. Like I said, rust is your friend, and, steel is, there's some of these things that are required. And again, focusing on those 4 billion people in that new fertile crescent between Istanbul and Vladivostok is really what you need to focus on, and what are their needs and wants. And if you don't mine it or you don't grow it, you don't have it. I mean, you can't code up more steel over the weekend. Some guys in India, I mean, people have to go, this is long-term planning, big money, people that have to know what they're doing. That's why I like a company like Glencore. They're kind of agnostic. They've always been kind of naughty. They've been buying up coal assets because they kind of realize it, while the other mining companies are kind of divesting and focusing on the new energy metals, copper, the new oil. You've seen these headlines. And so they're kind of saying, well, there's probably a niche here. So yeah, I'm pretty long-term bullish. I mean, I heard like one guy, a friend of mine, well, he's more of an acquaintance, but we've talked over this before. Like Fergus Cullen, Trader Ferg, he calls them the new tobacco stocks. I think that's a good analogy how to think about it. People are going to hate it, but it's going to be there, and it's going to kick off these good cash flows for years and years. So yeah, I think that's I own several coal stocks. I think that they've done I think excellent opportunity long term.
Yeah, to your point on Glencore, they in my opinion, they basically stole Teck's coal assets off them, and I think they got a pretty good price. But the thing that makes me hesitate on that stock particularly is not just coal play. There's some other stuff in there that not as interested in owning, but I think it's definitely if I had a little bit more money to invest, I'd be definitely buying Glencore. But I have more ideas than money right now, so I think we kind of line up on a lot of the stuff we're seeing as far as the energy side of things. I'd be curious to hear some of your thoughts on the metals, and maybe it makes sense to start with gold in particular. With the start it's had to this year, I think that over the next 3 to 5 years, we're probably going a lot higher. But I've basically avoided the miners because, I mean, the way I kind of look at it is they're basically shitco's, and the royalties are pretty expensive. There might be something there that's an opportunity, but I think it makes sense to own a little bit of gold, but I have to do some more research before I kind of go and start investing in that sector, because there's a lot of landmines you can step on. So be curious to hear your thoughts on gold.
So everybody, if you have money, you should have a certain percentage of your money in precious metals in your physical possession. Luckily here in Texas, we have private vaults, so you don't have to keep it at your house and, get on videos like this, and then people, do a home invasion. So anybody listening, my stuff's not in the house, but you get my point. And why? Because gold's being remonetized. Okay. It has historically been money. It's the perfect money. Silver, its little cousin, brother, to a certain extent. It was always money. Okay. And it will be money again, because we are coming to the end of a debt super cycle, in the particularly that the hegemon has run up. And you see a couple things why I'm bullish on gold. Gold's not being bought necessarily by retail investors. It's being bought by central banks, mostly in the global south and east. They have been major buyers, record buyers over the last 2 years, and up until the reading that I've seen, they've been continue to buy, and they're price agnostic. Why are they buying gold? Well, first of all, the United States is acting completely crazy, running around the world, wanting wars and dictating things. They're a flailing giant. They're like the cave troll in Lord of the Rings movie. He's got so many arrows and it's going down, man. It's like an elephant that's thrashing around, that's been shot. It's going to destroy a lot of things before it dies. And the Western hegemon, Anglo-American hegemon, is in decline. It's just, I don't care how you want to look at it. The data's there. The global South and East has higher percentage of global GDP now. These are countries that are legitimate countries. The second, third, fourth largest economy. Russia's now the fourth largest economy. China's the second largest or second largest economy. These people want to be relevant in the world. They're going to exercise political power. And so they are a challenge to the hegemon. And so instead of finding collaborative ways to mutually benefit, the United States and its allies have chosen not to do that. And so historically, one of the things that historians are going to look back at is after the dollar is no longer the reserve currency, which is coming at some point. One of the main things will be the decision that was taken to kick Russia out of the SWIFT system and freeze $300 billion of their assets. It doesn't really matter. I'm not going to have a conversation about the morality and whether it was principled. It sent a message to the rest of the world that contrary to what everybody believes in the United States, the world doesn't revolve around the United States. If you've lived in other countries like I have, if you know other people, countries have their own interests. And so China's interests are different than people in Dubuque's, Iowa's interests. Okay. And so if you send the message out to people that it's my way or the highway, and you're going to run around the world and do these things, then people are going to be like, okay, you've kicked them out of the SWIFT system. You've confiscated their assets. We're a major holder of U.S. treasuries. You're telling the Pentagon, the administration is telling the Pentagon to prepare for a literal war with China by 2026. Yeah, there's a reason why they're buying gold. There's a reason why the Saudis are buying gold. There's a reason why all these countries are buying gold, because at one point back in the 70s, even when I was a kid or before that, this is what the reserve assets of central banks were. And then as they financialized their economies, the West did, they started moving into treasury securities and currency, all this crap. Okay. And so now people are like, wait a minute, we have this giant hegemon that's in decline. It's rudderless. It's making wacko decisions, and it's calling everybody an enemy that doesn't agree with them. And so, you know what? We don't need to be in as many, the dollar is still the reserve currency. It will be for a while. The U.S. is still a relevant country. It's still a good place to do business, but they're sending the wrong message out. And that's why gold's being remonetized around the world. You can look at, Tavi Costa had a good chart about this. It's showing over it's not just the last year or so, it's been several years as more and more you're seeing the percentage of gold as central bank asset increasing over time and treasuries going down. Okay. And that's not just one or two central banks. That's the entire world. People got the message. Okay. So that's what's driving the demand. Like I said, these banks are going to be price agnostic, and gold's money for a reason. Men have to go into the ground and toil. It's very difficult to extract it, so you can't increase the amount of gold very quickly, maybe 1% per year, if that. And so it's perfect for money. I mean, Aristotle talked about what the metrics are for money, and most people don't understand it. And so with the debts that we have, with the problems we have in the United States, unfunded liabilities, all the other issues, I think the rest of the world looks at and says, as Ray Dalio says, as a personal investor or regular person, you should look at it as, if you don't own some percentage of gold in your portfolio, you don't understand math and history. I mean, that's, you can expand on why that is, but it protects you against central bank and government malfeasance. And we know, look, I know that people think the United States is this shining hill on the, it's just like every other empire throughout the world, okay, that ever existed. It went into ascent, then it goes into decline for the same reason. Over indebtedness, corruption, military overreach. That's what's happening. And so it's going to have the same fate. So you need to, let's talk about the debt, for example. I don't know how high the debt can go. The CBO published a report a few months ago that said that by 2033, the federal debt would be over $50 trillion. It'll be $50 trillion by the end of this decade. And if you're at a 5% interest rate, you're $2.5 trillion in interest a year. These things are unsustainable. You have $100 to $200 trillion in unfunded pension, Medicare, and Social Security liabilities. These will be paid. It'll just be paid in depreciating dollars. Ben Bernanke said that to Ron Paul in, the 90s many times during hearings. So that's what I'm talking about, central bank and government malfeasance. So these are this insurance, it's real money. And I guess you could talk about Bitcoin to a certain extent, or currencies. That's not only not my cup of tea. I see the argument for it. It's another asset that can't be inflated away. And I think that what people need to do when they talk about gold or any of these hard assets is familiarize yourself with a concept called the Cantillon effect. And the Cantillon effect is, this was a guy in France talked about this in the 18th century. The closer you were to the king, his name was Cantillon. So the closer you are to the king, the more benefit you have. And it's the same thing here. The closer you are to the printing press, the more benefit you have, because you get access to the newly inflated dollars before anybody else. And people that have assets and wealth, that's why they benefit from these inflations, because they have hard assets, or they have, things. That's why people invest, these wealthy families invest in art and fine wine and precious metals and real estate, because these can't be inflated. And I think the average person needs to think. That's, again, going and looking at successful people, how they do things. Now, you don't buy physical metal to get rich. You do it to preserve your capital, and again, protect yourself from what's coming. The debasement of the U.S. dollar, which is ongoing and continuous, and will continue. So, to your point, mining is a horrible business. All mining is horrible. There are small periods of time when the price spikes in these commodities where mining companies can earn excess profits. So what I think one has to do, if you want to speculate in mining companies, because that's what it is, they're not buy and hold investments. You have to kind of understand the cyclicality of each commodity or resource, and they do have repeating cycles, and then kind of understand, when you think that that's going to be in that small window where they're going to earn those excess profits. I believe that the gold price is going to go tremendously higher. There are certain gold mining companies that I think are, take a look at Anglo Gold Ashanti. They've totally changed the business model, new management. They moved the company to Denver. That doesn't mean, when people talk about messing around with mining stocks, they're talking about going to the TSX and buying all these crap goes. And that's a whole nother, that's a whole nother deal. So I think there's opportunity here and there. I've owned a company owns a mine in Zimbabwe. I've owned it for 10 years. It pays us 5 or 6% dividend. It's just, they've done a tremendous trades in on the New York Stock Exchange. So they have a very low cost, but it's a single mine in a country has a bad reputation. But this management team is exceptional, has been able to extract value and pay, ongoing dividends. And there's occasional spikes. I owned it up till about 2 years ago. It made a run to like $30 a share. It came back. It's at $10 a share now. So things don't really change. It's just the perception and trying to catch that cyclicality of when people, if the gold price keeps moving higher, interest in mining shares will come back. And so I think you really have to be precise. You can't just buy and hold these things, because you're right. It's a horrible business. It's hard to make money. It's kind of like natural gas. You got to really be at the right place at the right time.
Yeah, I definitely agree. I think it's tough with the mining stocks. There are some things that what you're saying about the miner in Africa reminds me of stock I've been buying a little bit of recently, Alpha Min Resources and their tin mine in the Congo. But kind of the same deal where management's done a pretty good job, pays dividends, all that stuff. But you do have the Africa and political risk there. So, and on the debt spiral and basically dollar continuing to inflate, the way I kind of look at that is we basically are in a situation where investors are going to basically start to shift their money, if they're not already doing so, into anything that can't be printed. And I think we're probably set up for a pretty interesting commodities bull market for the next, call it 5 to 10 years. And I guess the way I'd look at it is anyone holding like 10 to 30-year bonds, I think they're kind of the suckers at the card table. Not saying it won't work out for a short-term trade, but I mean, I think they're basically playing with fire if they're trying to hold those till maturity. So I think it's a very interesting setup for gold and precious metals. I'd be curious if you have any thoughts on platinum or any of the platinum group metals. There's basically very limited options as far as public companies to invest there, but I think bought a little physical platinum recently. I think it's a very interesting setup for the next several years. Because, like you said, I think the whole electric vehicle craze is, I think we kind of hit peak ESG, and I think we're starting to realize that all these, like, we're not going to be driving 30 or 40% electric vehicles or whatever the projections were. And when people realize that we're still going to need catalytic converters and we're basically in a huge shortage for platinum, I think that's going to, I would assume, catch up to gold at some point. So I'd be curious to hear your thoughts on that.
Yeah, I'm on a monthly platinum acquisition dollar cost averaging plan. So that's what I think about platinum. I'm buying it. So there's
Nice.
ways to do that. So that's what I've been doing. And it's cheap relative to gold. And you're exactly right. Internal combustion engines have a long, long life ahead of them. And you're right. They will, and there's been underinvestment in that. You're relying on a lot of the platinum group metals to come from two places, South Africa and Russia. And so, yeah, I think there's an opportunity there. Again, it's just another precious metal. So I'm happy to hold it. It doesn't bother me. I consider these things kind of like savings accounts, So I'm just been buying silver. I mean, it's harder to accumulate silver because it starts piling up. You used to be able to buy it 20 years ago at $4 an ounce, $5 an ounce. So, it starts piling up over time, especially if you dollar cost average. So I like, platinum group metals are pretty interesting. Again, you can look at a company like Impala Mining, but you got to buy it at the right time. So that's why I think I do use a little bit of technical analysis to not necessarily predict, but kind of look where I see it, like if something's flatlined for a while or going in a range and then breaks out, then it might be an opportune time to move into that particular mining stock. But again, there's nothing wrong with just buying the physical. And I mean, they have different denominations, right? 1 ounce, quarter ounce, 10th ounce, whatever. So you can still do that with your even if you don't have a big budget. So
Yeah, I think the last metal that's starting to get a lot more attention recently is copper, and that's one where the sentiment is basically makes me a little bit hesitant to start buying any of the copper miners. But I think longer term we had higher, but it seems like it went from being, oh, copper's low, we're going into recession, to copper is the no-brainer trade, and everyone's got to load up on copper. So I'd be curious to hear your thoughts on where we're going with copper longer term, maybe what's coming up if we do get a recession, any of the things you look at there.
yeah, well, I look at global PMIs for these industrial base metals, and you're above 50 on your global PMIs. So you can correlate that exactly with copper demand, prices, energy. I think it's going higher. It's been underinvested in, and you're the world's largest producer. Chile is having production problems. Where are the big mines that are to come online? You need all these 8 or 10 Escondidas over the next 10 years, regardless of ESG, regardless of EVs. It's just not going to happen. So again, there'll be, you'll look at one of these charts over like you'll look back over 10 years and you'll see, okay, this thing moved from the lower left to the upper right, and there will be being a secular bull market, you'll be able to see that with periodic cyclical declines that may be 6 months to a year, like if there's a recession or what have you. I mean, it doesn't take much. Like you had the mine in Panama that was 1% of world copper production. Okay, it only takes, all these things are priced at the margin, so it doesn't take much to push things into a deficit or a slight surplus and magnify the price changes. So yeah, I mean, I think the sentiment, I wouldn't go rushing in by copper stocks right now because everybody's talking about it. So a lot, as a matter of fact, now that you see, as I call it, a lot of intermarket dynamics playing, most of the world's central banks are cutting rates. You just had the ECB and Bank of Canada cut this week. The Fed will cut by the end of the year. We'll be synchronized then. We're in a new liquidity. Mike Howell talks about this. We're in a new liquidity cycle upwards. It's going to last several years, and it's going to push all these things. As another analyst I like says, it's Money Fest 2024. So, the dollar's up, so commodities resources are down the last couple of weeks. Why is the dollar up? Well, other central banks are cutting rates, and the Fed is holding rates. So you get intermarket, things that affect things. So to your point, I think if you look at these things long term, I want to look at things that are super cheap that no one's talking about. If you want another idea, it's not my idea. I mean, Mark Faber's been talking for 6 months about Hong Kong real estate companies. Okay. I just bought my first one today. These things, some of them are down 50, 60, 90%. Okay. So everybody's like, I'm not buying Chinese stocks. Chinese stocks are cheap. Okay. They're the cheapest they've been in a while. Nobody's talking about them. I put it in Google Trends, different keywords, and I get a little report. And one of the keywords I have is uninvestable. For the last 6 months, for that keyword uninvestable, I keep getting articles about China. So I'm a little bit hesitant. So I'm looking at other ways like via Hong Kong or Singapore to play these things. You talked about, for example, offshore services. There are half a dozen offshore companies that build rigs, FPSOs, have service boats that trade in Singapore that are trading still for 10 or 20 cents on the dollar of book value. And they're still, some of them are up over 100% already. If you do the work and you're willing to go to some of these other markets, yeah, you could go buy Tidewater, but it's had a huge move. Why not go buy Atlantic Navigation in Singapore? It has basically the same thing. So, but you take on additional risk because the companies are smaller and it's harder for people to go to these markets. That's why they don't have the liquidity flows. That's what I'm saying. You have to open up your perspectives, and there's a lot of opportunity out there, and you want to go to the things that no one else is doing. Okay, you're right. You shouldn't be buying copper right now, but why not look at Swire Properties? It's pretty cheap. They have almost no debt, and they're paying a 7% dividend. And the stock's down 60%. Baby out with the bathwater. There's Republic of Georgia. U.S. just tried to do another color revolution over there. There's a company I own that trades in London that's already was selling at 50% of. It's basically like a Berkshire Hathaway of the Republic of Georgia. It's done nothing but go, in a basically nice chart, was beautiful, was slowly going up over time. It was selling at 50% of net asset value because no one cares about it. No one knows what's going on there. And then we had this little revolution thing that got quelled, this passing of the NGO law, which is the same law we have in the US, by the way. And the stock dropped 40%. Bank of Georgia stock dropped 40%. It's a very profitable bank. I mean, so these are the opportunities you have to look for. When the war broke out in Ukraine and Russia, this particular company that I was talking about, I'm not going to give the name, it's in the portfolio. It's not hard to figure it out. But anyways, it dropped 40%. These are opportunities, right? So people just react. And so I'm looking for the stuff that's super cheap that nobody wants. One thing that no one's talking about is agriculture. Okay. I don't think the fertilizer stocks are ready to turn yet, but it's something to keep in mind. No one's talking about that. So there are things out there, I think, that that's what you kind of want to look for, is the things that I'm always looking for something that's been cremated down 90%. That doesn't mean I'm going to buy it. It means I'm going to look at it. I always keep a little file. I keep notes on everything. Eventually North Korea is going to open up, and eventually Venezuela is going to open up. I mean, I'm a member of, I get the Cuppies periodical that comes out. It's pretty high price, but they have a monthly thing. There's a kid on there that's a U.S. guy. He has Venezuela, but he's down there doing outstanding real estate deals, and he's given the straight scoop. There's opportunity if you're on the ground. It's not like you think it is. It's not a social. It's not impossible to do business here, and this stuff's cheap. So I think that a lot of times what it is people get home country bias, and because things are hard, it keeps things cheap because you can't get the same, you know, everybody's just trading on the US. That's one of the things I see in my newsletter. We have a lot of stuff that's overseas, and people will drop us. Well, I can't buy these things, so I'm getting okay. Well, I mean, this is where opportunity is in other places. I mean, nobody talks about South America. I mean, why not buy like Banco Colombia? I mean, it's been doing very well. It pays an 11% dividend. The country's turning around. They're cutting rates. I mean, I don't know. I mean, some of the stuff's not that hard in my book to find. It's just nobody talks. So I wouldn't just get wedded to the reason that resources are being talked about is because they're cheap. But to your point, there's a lot of other things out there. And of course, you know, you can't kiss all the girls, and some people just aren't interested in some of these things. So you got to go where your interests are and what, you know, is going to stimulate you, and what, you know, how much bandwidth you have to analyze this stuff. But I mean, I think you have to make the whole world your oyster at this point. It makes it so easy to do it with the internet now, and the ability to travel even if you want to go to these places. So yeah, I mean, I think there's tremendous opportunity out there. It's not necessarily just in the things we've talked about, although some of these things, that's what you should look for, is things that are dead. I always use this term, like something that's going from horrible to less horrible can result in several 100% of revaluation. So it doesn't have to like get perfect again. It can just go from horrible. I mean, there's a company like what's going on in Myanmar. There's a company that trades in Singapore. It's a major company there. It's a conglomerate, right? It was down about 80%. You know, there's all kinds of things out there. It's still profitable. It's doing things. It was the same thing. I learned this lesson in Cyprus. Remember when they had the crisis in Cyprus, like 2011, I think it was. I can't remember. And the banks did bail-ins. They confiscated people's deposits and stuff like that. So everybody sold the Cyprus stock market. It was down 99%. And so, but there were companies trading there that had most of their business outside of Cyprus, like Logitech. Okay, it makes mouses. I think they were based there. And so they didn't really have any sales in Cyprus. Whatever mouses were sold in, you know, Best Buy in Cyprus, I don't know, but the rest of the world. And so the baby gets thrown out with the bathwater. European banks, they're cheap. They're horribly run. The managements suck. But for 12 years, these banks haven't made any loans. And because rates went up in Europe from 0 to 4%, the net interest income has exploded at these companies. But new managements have come in at, you know, Bank of Cyprus, Unicredit. And so now they're starting to cut rates. You look at the charts, it's Unicredit, Commerce Bank, Barclays, okay? Look at them historically. They're all on 45-degree launches, okay? Because there's so much cash pouring in just because of the net interest income. They haven't even expanded their loan books because they're horrible managements, most of them. But the cash is pouring in. So what are they doing? Buying back stock and paying dividends. I mean, what's wrong with that? So there's always something out there that's cheap. I kind of droned on a little bit, and I'll stop there.
No, it's always interesting to hear what other investors are looking at. I think there's definitely a lot of opportunities out there in markets that most investors will avoid. I think South America is ripe for the picking if you know where to look. There are a couple small offshore companies in Southeast Asia that I have looked at. Haven't pulled the trigger on any of them yet, but definitely lots of ideas to look at. So I think it might be interesting to wrap up with your thoughts on some of the geopolitical situation if you have time. But I think it's basically a very interesting time. We obviously have the presidential election in the back half of this year. We have Russia and Ukraine, which seems like Russia continues to grind away and basically take their time and not try and rush into any mistakes. We have the Middle East, where Israel's continuing to do their thing in Gaza. I'd be curious to hear your thoughts on that and what you're kind of seeing in those different areas of the world.
Well, I mean, where do you want to start? Okay, so again, these are all tied back to the original discussion around this hegemon that's collapsing, right? They're running this post-World War II neoliberal New World Order, rules-based order, they call it. But no one, as Mr. Putin says, what are the rules? They're not published anywhere. Well, the rules are whatever benefits the hegemon. That's the rule. And, you know, people don't like having these conversations. Look, I'm looking at things for the way they are. I'm a student of history. Multicultural empires, all empires decline for the same reason, and we're in decline too. I've made these predictions. They're not wild predictions. Social Security and Medicare are going to be the stake into the thing, okay? And this unfettered immigration. The United States will not exist as a political entity within a generation and as an intact entity. It won't. It'll be several countries. Is that a bad thing? Probably not. You know, the British were the world hegemon, and they destroyed it by inserting themselves into World War I. Okay, because they had another hegemon that was rising, which was Germany, Imperial Germany at the time, and so they went to war. They went into debt. That set the peace of that war, set in motion the Second World War. And then you saw what happened. So then the United States emerged because it had two moats around it as the new hegemon. It wasn't affected. It was the new industrial economic power of the world, and it used that to its advantage. It won the Cold War. I remember in 1989 or 90 when the Scorpions had that song when the Berlin Wall came down. Everybody said, we're going to beat these swords into plowshares. It's going to be, no, we didn't. It was the same thing going forward. And so that's what empires do. And people in the United States don't think they live in an empire. They do. They don't want to admit it. They think this is, it's like I was watching Wall Street the other day. And Gordon Gekko said to Bud Fox, now you don't think you live in a democracy, do you? 1% of the people control, now in that movie it was 50% of the wealth. Now it's 80% of the wealth. I mean, get smart. I mean, people don't want to look at things. So what's going to happen? You're right. All people call me like I'm like this Putin apologist. I don't care about this stuff. I look at the thing reality. The country has 150 million people. It's the fifth largest economy in the world. Russia is on a purchasing power thing. And so what they wanted to do, read Bill Browder's book when he was working, I think, at Goldman Sachs. They sent him over there when the Soviet Union collapsed, and they were buying all the vouchers. And people don't understand what was going on in Russia in early 1990s and how bad it was there. And whether you like Mr. Putin or not, he brought the country back, okay? And his people. It's not way it was then. It was horrible there. I was there. I know exactly. I've been going there for 2 decades. I know exactly how it was. I know the people there. Okay. What interest, Ben, I mean, of the average person in the United States, of who is in charge of Lugansk People's Republic and the Donetsk People's Republic? What does it have to do with the prices of groceries at Kroger? That's what the average person in the U.S. cares about. I'll do this. I'm thinking about doing this exercise. I'm going to get $1,000 and stand in front of a grocery store or Walmart and have a map and say, will you please show me where the Donetsk People's Republic is on this map? I'll give you $1,000. People don't know. They don't care. So you have this elite group of people that are in charge in the West, and they gain benefit from this empire. And if the empire slips away, their benefit goes away also. They're not empowered politically. The wealth they're able to cream off goes away. Look at France. I mean, look at the video that Giorgia Meloni was talking about, the Prime Minister of Italy, before she got elected, when she was talking about how France manipulates the currency and the seigniorage in the Francophone Africa. Now they're throwing off this yoke now. Now, you want to talk about Israel and the Palestinians? I don't care about that. I don't have any sympathy for the Palestinians or the people in Israel. Israel, is a country surrounded by people that hate it. They got a hard road to hoe. My advice is learn to get along with your neighbors. Build a big wall and get along with your neighbors. I don't know what else to say. I'm not going to say what I really think. I mean, I remember a guy named Rabbi Kahana when he used to be in the Jewish Defense League. He went there and got in the Knesset, and he wanted to throw all the Arab. That was 40 years ago. Well, I guess that's what they're going to do. It doesn't have any, I don't care about it because it has nothing to do with the average problems of the average person here. I'm a populist. I'm a nationalist for the U.S. I care about my interests for the average person here in the U.S., working people that just want to live their life, not the elites. And the elites are leading us down a primrose path. And so that's how I think about it. So what do I think is going to happen? Russia's going to win the war. They require a couple of things. They want a European security framework put in place where their concerns are listened to and they're at least taken into consideration. And that means Ukraine will be demilitarized and it will be a neutral state. And if right now they seem to have the upper hand now, which was an inevitability because they had the industrial capacity and population, and the Europeans don't. They've deindustrialized. And so is the U.S. And so it's just inevitable what's going to happen. So you have, what's going to happen. I don't know. Eventually, it will become a negotiated settlement when everybody gets sick of it, probably after the election, because Mr. Biden can't afford to, give in now right before the election and have two major foreign policy failures in his presidency, the withdrawal from Afghanistan. So this is the cynical, diabolical things that these people do. They start these things. I'm still waiting for the weapons of mass destruction to be found in Iraq. I mean, 20 years in Afghanistan, a full generation, and then, everybody can come to their own conclusions. So this is all part and parcel of the U.S. being in terminal decline. And, look at all the other problems we have here. So I'm more concerned about the 10 million people that have come across the border undocumented and what we're going to, how is that, what is that going to do, and then, all the other issues we have here that affect the average person. And yet the elites, they have these other considerations. I'm not so there won't be a nuclear war or anything like that, but can we take another defeat like this? I mean, if the Russians come out ahead, I guess you would have to ask as an outside observer, what's the point of NATO? What is the point of this? So I think there's going to be a lot of changes. There's a lot of demographic things that are happening in Europe that are almost irreversible now. You have incompatible people coming in by the millions. I mean, people don't want to look at it. I mean, you just had elections in the UK. A lot of the major cities there now have people that are radical Islamists as the mayors of those cities. So I ask you, there's a lot of issues that are going to, let's put it this way. Again, everything, you've heard the term like silver and gold is moving from west to east, right? I mean, that's the same thing that's happening with the geopolitical power. It's going to be moving to the east. And the problem is when these things happen, when one empire cedes hegemon to the new empire, there's usually a lot of conflict and a lot of chaos. And I think that's what you can look forward to over the next 10, 20, 30 years until this gets, ironed out. And that's going to create a lot of turmoil, but a lot of opportunity for speculators. It's going to be very bullish for hard assets and resources. And used to be a newsletter writer. I don't know if he still writes. His name was Richard Marbury, I think. And he used to call that whole area from North Africa through the Middle East and all that into the stands. He called it Chaos Stand. And he kind of this was like 20 years ago. I don't know if he still writes, but I remember that. And I think that's what you're going to see, not just there, but around the whole world. When you have two, like I said, you have the new kid coming up and the old person now, having to cede power, that, you have to give up a lot. I mean, look what happened when Great Britain was no longer the world hegemon. They said the sun never set on the British Empire. Well, now, I mean, Britain didn't go away. It's just one country of the G7. No one gives it a second thought. And so hopefully we'll come to our senses and come to look for outcomes that are beneficial for both parties. But that really isn't the historical narrative. So we'll see. Difficult to say.
Yeah, I agree with you. I think there are a lot of people in power that don't have to deal with the consequences of their actions, and they definitely don't have motivations that line up with the average American. And I'm right there with you on immigration. I think that's going to be the main issue of the election this year. And I think one of the biggest questions we have to answer moving forward. So in wrapping up, I usually have come up with a closing question. And the closing question is, what book should I add to my reading list? Can be investments or history or any other topic. But what do you think I should check out and add to the reading list?
That's a good question. I don't know, it just popped in my head. I'll tell you, The Black Book of Communism. I don't know if you've ever read it. It's written by two former French communists. It catalogs all the atrocities through the various worldwide communist movements and all the people they killed. It's very interesting to see the mindset. It's similar. If you read in there, they'll have a lot of quotes from a lot of revolutionaries or these leaders, and you'll see that a lot of them are similar to what you see here in the United States from progressives and things. It's a very dangerous situation here in the United States right now, and in the West overall. There's a neo-Marxist movement. It's not one based on, it's based on total power for the sake of power, and it's not a revolution of the proletariat of farmers and workers. It's more around these aggrieved social classes that have glommed onto that as a medium for the revolutionary push, because Americans would never go for the economic arguments of Marxism and Bolshevism, but when you put it into the social terms, you see how attractive it is for these so-called marginalized groups and well, you know what I'm talking.
The victim classes. Yeah,
exactly. And so the thing that's interesting is you really need to understand the mindset of these people. They believe progressivism never stops. There's no goal except for total power and then elimination of the opposition. You see that already. You see the lawfare. It starts with things like this. Don't think for a second. If you read that book, you'll see how these revolutionaries treated people in other countries, up to and including, mass, extermination of, and the justifications that were used to do that. I'm not suggesting that's going to happen in the United States. I just think it's an interesting, you see where this is going. This is a house divided. It's irreconcilable differences at this point. You have somewhere between 40 and 50% of the population on each side that hates each other. It's not reconcilable. It's going to be a problem. It's not going to be amicable in my view. So I think people should understand the mindset of these other people and understand what they're capable or what they're willing to do. And how others have before them have justified doing these things. So that would be what it just popped in my mind. I could give you an investment book, but that's
no, I think that's
yeah.
I think that's a great recommendation. Definitely something I'll add to the list. Yeah, I mean, you've given my viewers a lot to think about, a lot of different investment ideas, different sectors, different opportunities, but also a lot to think about as far as the big picture where we're at. So thank you. Thanks again for your time. Thanks for coming on. And for all you guys out there, thanks for stopping by.